We are still early stage within the final year of the crypto bull market when a lot of the big gains come. Have patience, see the bigger picture. Also, how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. Now, I think Solana, as you know, is a very broad, deep protocol. There is a lot of activity that goes on. There will be other activity that replaces memes. Some memes will come back to life. It is not what people are saying, but Solana has overshot versus global M2. And that is this last leg of the cycle. So Solana is looking very cheap, and I'll show you a bit more on that in a sec. So that's interesting. Again, you should be thinking about the dips. Solana should outperform Bitcoin for the rest of this cycle and Ethereum too, with SUI outperforming Solana. It is a player versus everything. We all want everybody to succeed here. Don't have all of your stuff in small altcoins. Have about 80 or 90% in the main tokens, and you'll be fine. But again, this is not a player versus player. We're not trying to outcompete with each other. We're all trying to win here, and that's very important to me.
Solana is showing signs of recovery, with oversold indicators, historical trends, and growing institutional interest reinforcing its recovery potential. Solana remains in the spotlight despite market declines, with analysts predicting a strong recovery in the coming month. Key technical indicators suggest that Solana is at an oversold level, which could trigger a potential rebound. Raoul Pal noted that Solana is oversold by 2 standard deviations on the long regression channel. Solana remains in the spotlight despite the broader digital asset facing declines. Analysts predict a potential rebound as key indicators suggest that the coin is oversold. Technical analysts consider the current position of the market value to be an ideal time to acquire Solana tokens. Despite the continued price decline, Solana has shown resilience against Bitcoin. These contrasting trends suggest that investors remain confident in Solana's long-term potential. Solana has a strong track record of price increases in March, further supporting the bullish outlook. In March 2021, Solana rose by 49%, followed by a 23.2% increase in 2002. The cryptocurrency fell in 2023, but rose to 60.8% in March 2024, confirming the current trend. If this historical trend continues, Solana could erase its monthly losses of 39.5% and regain market momentum. Recent market movements indicate a general uncertainty about the value of the Solana cryptocurrency. Analysts and observers are predicting a price rally for Solana based on its proven historical trends and strong market fundamentals. According to Raoul Pal, Solana and SUI will be the biggest winners of 2025. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
All of this stuff that's making everyone nervous should be over by the by the middle of next week. And then we can go to the healing phase, and then again, we can start rising. The healing phase, who knows? Could be 2 weeks, could be a month, but the back end of March, we should start to see prices accelerate, and then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand markets. So we had the start of the banana zone. We are now in correction phase 1. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction.
Paul says it's possible that cryptocurrency will experience an extended uptrend in this cycle. He claims that the second phase of the banana zone, a term he coined to refer to a period of rapid and explosive growth in the price of digital assets, will extend into 2026. So we've had the beginning of the banana zone, and now we're in the first phase of a correction, which happens every time. Look at 2017. It's almost identical. Then in March, April, and May, we start accelerating again into the next phase of the banana zone, and then we have another correction, and you'll think it's all over. Fear will take over again. Then we'll have the final peak at the end of the cycle. According to Paul, the business cycle, the fluctuations found in a country's total economic activity marked by recurring ups and downs, could extend into next year, taking cryptocurrencies with it. It's not a guarantee. It's not a prediction yet, but it's what Paul has in mind because of the structure of the business cycle. So we'll probably be able to continue for longer, and that will allow us to get even higher prices in the future. Paul predicted that the current bull cycle in the cryptocurrency market, which was initially expected to peak in 2025, could extend into 2026 due to a prolonged business cycle. Paul addressed the chaotic market conditions, reassuring crypto investors navigating high volatility and explaining why he believes the cycle's expansion aligns with broader economic indicators. The veteran macroeconomic analyst noted that the slow pace of the business cycle below the ISM survey's key 50 threshold, a measure of economic activity, is now showing signs of expansion, pushing back the timeline for the cryptocurrency market's peak. According to him, the business cycle lasts a long time below 50 and is now starting to extend. This has likely extended the cycle into 2026, he said, noting that this shift is not yet a firm prediction but rather a structural observation based on current data. He links the extension to improving financial conditions, including a weaker U.S. dollar and anticipated lower interest rates, which he believes will boost risk assets like Bitcoin and altcoins. Paul highlighted Bitcoin's recent pullback from a high of 110,000 to 80,000 and Solana's 53% drop as typical volatility in a bull market, urging patience. He pointed to historical patterns such as the 2017 cycle under Trump's first term, where a similar dollar-driven economic downturn preceded a massive surge in cryptocurrencies. According to Paul, a falling U.S. dollar could trigger a strong rally in the cryptocurrency market in the second quarter of the year. His comments come a day after U.S. Treasury Secretary Scott Bessent outlined his vision for cutting interest rates, a move that could further weaken the dollar. Paul believes these conditions could set the stage for a strong second quarter for the tech and cryptocurrency markets, with a potential positive carryover into the second half of 2025 if trends persist. Historically, Bitcoin has performed well in the second quarter with average returns of 26.89% since 2013, according to data from CoinGlass. Paul emphasized that among the three major macroeconomic factors, interest rates, oil prices, and the U.S. dollar, the trajectory of the dollar is the most critical for the cryptocurrency market. A weaker U.S. dollar index typically pushes investors toward alternative assets such as Bitcoin, gold, and stocks. In contrast, when Donald Trump was elected president in November 2024, the U.S. dollar hit yearly highs, prompting analysts to warn that the dollar strength is a headwind for Bitcoin. Bitcoin could face a tougher climb toward $94,000 after a recent failed attempt to reclaim that price level, according to Bitfinex analysts. In a recent report, the exchange's researchers noted that any recovery towards $94,000 could face significant resistance. The warning comes after Bitcoin fell below the $94,000 threshold on March 2, 2025. Since then, Bitcoin has yet to stage a convincing rally. The Federal Reserve's upcoming interest rate decision, scheduled for March 19th, is also expected to play a major role in shaping sentiment.